Right, well, I've closed out almost all of what I've had on, really, on and off for the last, since September. I guess I keep using September because that's when I started using these videos. That's my reference date. I've been trading for 30 something years, I think, since late 1980s. God, that makes me sound fucking old. For the sake of having a reference point, I'm not going to go back all that way. So September last year it is. And the reason I've closed things out is because they've all kind of reached my targets. Like the markets might have more to go. I don't know. Who does? Not me. But they've kind of reached my targets, right? So I'm going to start with the Russell US equities. So this is like the trend going back 2009. So you can see how where it's hit this bottom trend line, it's really is hit there. And when you zoom in, you can see these things within a bee's dick. That's where it's turned around. So that's one tell to me that it may well have had its run. Another one is this pattern, which for me is one of the all-time kind of killer patterns where you have everyone rush to the party, they play pass the parcel, and they go, holy fuck, we're out of here. It's hasn't totally done it, but it's come back to the 2018 high, and actually it came back to right on. How's that, hey? The pre-COVID high as well. So that's a second tell in terms of it. To me, it's really filled that gap. And the other one is it's been a healthy retracement, depending on where you measure this, right? Look at that though. Right on a 50%. For this, I kind of wash out a lot of this low here just because it was a real clean out, on the day. But it's certainly done a heavy retracement. So that's the third tell. The other one, I guess the fourth is it's over, not, I mean, it's just oversold on the weeklies. And that's a significant point. It's a reversal point here. So kind of reversal point in there. It's a reversal point in here, but it certainly did go much further oversold. It's a reversal point just after there. It had a leg lower, but it didn't last very long. Obviously here. So there's a few things to me that says there's a good chance that we've had the correction and it's going to stabilise from here. There still could be a clean out, but we're going to need a catalyst other than the catalysts we've seen so far, which is essentially geopolitics and inflation and the Fed moving. We're going to look at the Dow, the conservative end. It's kind of done a similar thing. Like these trend channels, I reposted a video last week or whatever of something I did at the beginning of the year. I just looked at all these long-term channels. And again, it's done the same thing as the Russell. It's touched that long-term support line. It has filled this gap where it's kind of rolled over. Look, it hasn't hit a major Fibbo, but if you go in here, right, like that one, right, you go, well, from that leg, it's certainly hit like a 50% retracement, and that's that November leg, which is a significant thing for the Dow. So basically, from the last time it hit that bottom of the channel, really, to when it hit the top of the channel, it's had a 50% retracement. Touching oversold, filled the gap, long-term channel. It's a lot of planets that kind of say, look, if you're trying to make money out of being short the market now, that's hard, right? Because you've missed the easy money. So you should have been fucking listening to me back in September. So here's the S&P, similar thing, right? Where it has touched. See, I mean, it does break through a little bit, but they're just little wicks on the candle. Sudden reversals, like this one, obviously a bit of an outlier, the COVID thing. But here you can see it's just touched on there. Again, it's done a 38 retracement, ignoring some of that noise. So it's hit that channel. it's done like a reasonable fibbo retracement. It's filled that gap, which I've been rabbiting on about for months, which I'm fucking so happy about. And it's done the one-to-one extension of this move down a little bit further. So, I mean, I'm still a bit cautious because it could still drop down to here. I mean, that's, I think, you know, when I was been looking at this, I've been saying 4,000, it's going to go there without a shadow of a doubt. Very magnetic. That's what it did. Here, you know, I just don't know. I think it's going to take another shock for it to go down. That shock could be Bitcoin, right? That's what would take it there. Possibly a Turkey-Russia default combined, but I think the odds are probably more for another meltdown in the crypto space. Slightly oversold on the weeklies. Yeah, very tempted to go long on this one, actually. In fact, on Friday I actually did go long, just in a small way. When it was kind of like up, where was it? Where did I go long? It's like 39.30, I think I went long. Yeah, because it was doing this. I just thought, right, if it breaks through that, then it's off. It didn't, so I stopped out at like 39.08. It went all the way down and then came back. To me, I think this could be forming a bit of a base here. There's a couple of lows round about that 38.50. There's another one back here somewhere from memory. No. It's both in here at 38.50. You know, there's a slight weakening price action, slight increasing momentum on the 4 hourly. To me, that is a bit of a signal for going long. Anyway, so I went long, stopped out 40 points, small position. Like that was like a $400 or something like that. Anyway, yeah. So that's the Russell, the Dow, the S&P, the Nasdaq. Now, it's had a good 50% retracement from that COVID low, but it hasn't hit the bottom of this trend line. And to me, that's why I'm just a bit cautious about being long, because, which is why that's like just a couple of micro contracts, the little ones. Can't get any smaller than that, at least in the futures market. That's why I was so cautious on that one with a small position, a tight stop, because this still looks like it could roll further. I'm very cautious about that. You know, the flip side, of course, is actually when you go out and you kind of look at, you know, the long term, right? You go, right. You know, this thing has a much further way to fall. So it is kind of a bit funny, kind of saying, oh yeah, I think we've done the yards there. I think we've done the easy money, put it that way. But to take it from 12,000 or 8,000, we're going to need another. We're going to need really a shock rather than just a downturn. And I said that shock could come from shitcoin, right? So they're the equity markets. So that's where I've kind of squared up all my shorts in the equities and starting to go long. I've squared up all my bonds apart from a curve position. This is the 10-year notes. You know, they really hit a good level, like a projection of that move. You can see it more clearly when you look at the yields. That's the price, right? So one thing that I've kind of looked at a lot is that, right, where the projection from there to that high, that was back in, you know, this time last year, back to this point here, there, and then up, it's totally reached that. That was my target all along. It hit it, and that's it. And I do think that there is a risk of it coming back and filling this gap, doing my little favourite pattern where it has shot up, done a bit of pass the parcel, could easily come back. Now it hasn't had declining highs here, which is normally what I look for as a tell, but it's certainly been overbought. It's certainly had a big run up and having a pause. That was a pretty punchy rejection of 321. It had the chance to go higher, obviously, state the obvious, but it didn't. Pull back pretty quickly. So that's where we're at. Some people do look at this on a log scale, which it kind of shows a bit of a different story. I'm not so comfortable using yields on a log scale, but yeah, I can see why people do it. It does make some sense because obviously like a 50-point move when rates at 10% is a vastly different thing than a 50-point move at 2%. So that there is certainly a rationale that makes a lot of sense for that, even though I don't do it. Probably just talk myself into doing it. Yeah, so you can see where it's come back to. You know, that's a neutral level, say going back, 20 years. So that's why I've squared up those 10 years. 2 years, similar story. This is the price, big leg down, past the parcel. We've got a series of higher lows there. To me, it could be ripe for a pullback. I do think the market's really overpriced what the Fed will and can do. I kind of think that some of the macro causes of inflation, supply chains and commodity prices, interest rates are not going to reduce those. They can't reduce them. They can kill demand, which will help, I think, at the sides, but it's not going to solve inflation per se. I think that inflation is just going to eat away at itself, and it's going to have to solve itself. I think that the supply chain thing, I don't think interest rates are going to solve it. Yeah. So and this is the 2 years. Again, it's hit my target just shy of it, which was this level in here at 290. It got pretty close. What's that, like 275 versus 295, 20 points off in the scheme of things. What's that between friends? Massively overbought for quite a long time. It could really have, it might shoot up to there, but you can see how quickly these things do turn around when the market kind of realises the damage is being done by these rates. You can see again here, it has a bit of pass at the top, comes screaming back. So I think the risk is much more to the downside now in terms of yields coming down, prices rallying in those markets. Easy money is certainly being done. I made good money out of that. So those yields, so the bonds I'm out of, the equities I'm out of at least in the futures. I've still got a currency position on long the Aussie. I do think that's going to come back. I'm patient on that one. It's a bit underwater at the moment, but I see that it's done like a good solid 50% retracement here. When I look at the Aussie, it's a beautiful long-term trending kind of thing. Like here, from this breakdown, right? It was a 1 to 1.6 to this low. Then from that breakdown point, that height down to here, that was like a 1 to 1. Beautiful. The electricians, I let this 1, 2, 3, 4, 5. This to me is like a bullish flag. In here, that's what I am banking on. Something like that. A bit of noise with that. There's a bit of a false breakout, I guess, in the hindsight. But I think it's a 1, 2, 3, and it'll come up to should come up to that 93 mark actually on technicals. If that does, God, I'll be rolling in cash if it does that. I can tell you that. Fingers crossed. You never know your luck in a big city. But if it is like a 1, 2, 3, right? The third wave can't be the shortest, right? So it's got to be at least there, possibly there, 1.08. Wow, giddy up. I don't think it's going to go there on the first go. I think it's probably more somewhere up there. I mean, it could be like an ABC, in which case there. But I do have a target of at least in there. Now, the interesting thing to me is, although this is a long time back, that gap is very, very reminiscent of, it echoes with what we saw in the S&P back in March last year, or when it did that gap around 3,950 to 4,050, just shot through. Quite an important level, 85. Like that's a big level. That's an important level. Just straight through. Didn't visit again. It's going to go back there, right? It will go back there. Mark my word. Famous last words. So that's why I'm still long the Aussie. I think there's obviously a lot of support down here at 68. Great buying there, in my view. I'm still short gold. A similar thing on some of these patterns to me, like this one. I started going short at 1940. I think it was up here. Shot up, past the parcel, lower highs, crashing down. I suspect it's going to turn there. That's just on this shorter time frame. Again, gold, to me, you've got to look at it on a weekly thing. I think what it's setting up for, shoot up past the parcel, and when it comes down, it's going to fill that gap pretty quickly. I've seen some research out there from established houses about saying gold's like $400 overvalued. To me, that makes sense. That action here, it's the same as this action here. I mean, it's literally one for one. Shoots up, really no serious retracement. Shoots up, no serious retracement. Tracks down with some lower highs. Tracks down with some lower highs. Has like a good neckline. In support there. You can see more clearly on the lines. Good neckline in there. Massive vertical shoot up to start the whole thing. Has a one last gasp for air. It's going to come down, and if it does, then I would say it's going to do a similar price action to what happened here over here. I don't have a big gold position on because I just don't trust it, right? It's got the lunatic factor investors, right? So it's a bit trickier to trade. Look, so that's basically my thinking at the moment. So I'm going to wind back on these videos. I've probably still done like one a week, but I think unless something changes, I haven't really got like a big conviction view on anything anymore. It's all reached my targets. I guess a couple of final things. One is, I think for the markets, the equity markets haven't legged down. I do think they're going to need another big shock. That big shock could come from here, in Bitcoin. And for the sake of those who haven't seen it, I will run through this again, where when Bitcoin's had corrections from various highs, they are like 80-something% highs, even from there, right? They're non-trivial, there to there. 1, 2, 3, and 80% from here takes us down to the bottom of that range there, okay? So that's one part of my thinking, like 80% correction. This thing's got priors on it. Just as it did this, shot up past the parcel, tanked down, right? I think it's going to do that. Shot up past the parcel, ready for a tank down, which is really actually quite similar to what it did here, right? Where it shot up, but instead of having the horizontal neckline on the downside, it had on the upside, and then when it broke through, it shot right up, right? So it breaks against the neckline. So you can see that's exactly what it did there. It's exactly what it did here, but in reverse. It's exactly what it did here. Forget about, you've got to wipe out some of that ridiculous volatility there. it's actually what it did here, right, in reverse. So see here, it shot up, bumps against the neckline, shoots up, bumps against the neckline, let it way down, breaks down. Here, down against the neckline, goes down. Here goes up against the neckline, goes up. Here, it's been doing the down against the neckline. I don't think it's going to get back up to 60,000 and break up anytime soon, right? I think that it is totally ready for that. Now, obviously, if that happens, that will be a big liquidation event in the market. After all, it's like $1 trillion in crypto, something ridiculous like that. That'll 85% of that gone. That will be a big loss. Now, some of the other reasons why I do think it's going to take another shock for the market to go down is really the thing that drove the market higher. A lot of these tech stocks, they've already crashed, right? Zoom. These are some household names right through, right? Big move up with no looking back. Pass the parcel, lower highs, big drop back down, right? That's Zoom. Let's look at Peloton. Again, these are all like popular memes. I don't invest in a single one of these. But you can see how it's doing the same thing. Shot up, didn't look back. Bit of pass the parcel, broke through this neckline here, whether you call it there or there, whatever. Dropped straight back down and then some, right? So it's crashed. Spotify. Let's have another look at another one. Same thing. Shot up, passed the parcel, came crashing through, and then went further, right? So, again, all these things, you can say, the way I see it is we've had crashes. Roku, whatever they do, shot up, passed the parcel, broke down, and then some. What else have we got? I said we got Block. See what they're up to. Square, I think they're on the list. On the list? Yeah, they're on the hit list. They shot up, passed the parcel, came screaming back down. ARK, everyone knows about ARK. I mean, they kind of typify the whole thing, right? Shot up, passed the parcel, screaming back down, and then some. So there's been, in all those tech stocks, the same story that they've shot up, a big vertical move up, past the parcel, and people have left the party, right? So I think in large quarters of the market, right, we've seen the crash actually happen. And again, the Russell kind of sums it all up to me. We've seen that crash happen, right? That's why I think the easy money is being done, because this pattern has happened so far and wide. But again, the big one that hasn't, which would be the biggest of all, is Bitcoin. I hate to talk about it because it's such a piece of shit. It's got zero intrinsic value. It's just a joke, right? I can't wait for all the Bitcoin coin spammers to get on this and saying, come and mine with me. Yeah, kind of whatever. So that is the big fad of the last couple of years that has not exploded really, and it will. Then that could take the Nasdaq down to this, certainly to that level, because although the Nasdaq has rolled over and hit like quite a good level in there, it hasn't gone to the bottom of the long-term trend line. And in my experience, like those 50%, like they're good, but once it's hit there, the chance of that are high, right? And I think that there's a good chance that it could do another move down. It's another 10%. That'd take like a 40% correction, right? So that's that's certainly on my mind. As I said, I'm not short at the moment, not short anymore. I've kind of made the easy money. I think the risk reward is probably to wait, actually, and see what happens. I think that's the best thing to do at the moment. I hate to say it, it sounds pretty lame saying the best thing to do is sit around and do nothing, but I think that's what I'm going to do. I've said it before though, and I'll probably say it again, that I'll sit around and do nothing. I'm not that kind of guy. Remember my boss when I worked at the bank used to say, mate, you're not paid to be square. That's like that was the first trading book I ran. It was an options book. I was never able to be square. Anyway, look, that's about it, really. So I'm still short along the Aussie, still short gold. I was squared up on the yields. I've got a really good curve position on, actually between some December 23 bills, bank bill futures and the Aussie 10 years. I got on an inverted rate of 60 points. So when people talk about the curve steepening and flattening, there's so much more to the curve than just the 2 years and the 10 years. Like that kind of got touched on zero just briefly, but in Australia, the DEC 23 3-month rate to the 10-year government bond went minus 60. So I got a good chunk of that on, which has been going well. But as I said, I'm kind of going to take a little bit of a break now until I see something more compelling. I've basically made a tenfold increase on my futures account since September. And to me, that shows the benefit of the macro picture, which for me has really been rates and the correction in the equity market, and not day trading. And also the benefit of a trading diary. So for me, this is a trading diary. It's not trading advice. You can call it education if you want, but actually it's largely for my own benefit, because I find when I have to verbalise what's going on in my head, that literally is my bullshit check. A lot of bullshit goes in your head, but when you start saying it, you kind of can't escape it. So that's kind of where I'm at. Look, I hope that's helpful. I'll be doing these probably out one a week. As I said, watch out for the other YouTubers out there. There's so many that are full of shit. Look up James Stanley and another guy, Chris Lewis. Chris Lewis is on YouTube. FX Daily, I think, is his one. He just does 1-minute videos every day on a few key markets. Chris Lewis and James Stanley, they're pretty much the only guys that I've come across that are good. There's one other channel which I kind of like. It's called the Black Swan Indicator. Look it up. They're just nice, simple, no fuss videos. He's got a proprietary indicator, which on the surface of it looks pretty good. I kind of like what he does. Anyway, that's about it. Have a good one. We'll catch you later.